Hello everyone, welcome to the live stream. Welcome to all my private group members. First time we're doing the live stream during natural gas inventory release, so that's going to be good. Let's go check sound. Hello everyone. Yeah, it works. Welcome to the live stream. My voice booming across out of the iPad. Welcome to the stream, everyone. This is going to be very relaxed and casual, so this is not one of those streams where we're trying to get clicks and views and people in and subscribers and hype up the YouTube channel. That's not what we're doing today. We're going to be doing just a bit of fun time together. I've invited the public along as well, so welcome to all of those who are not part of the YouTube membership. If you'd like to be, you can join below. There's a button that says join, and for $1 a month, you can be part of this YouTube community. If you want to go even better, you can join for a little bit more than that, not a lot, but some. You can join my private trading group, and there's a link below there. The best way to get into the private trading group, and at the cheapest way, is to sign up below to get your free Trader's Survival Kit package. There's a link below this video. And in that package, it's completely free. You'll get a whole bunch of videos, well, I think 2 videos, I'm exaggerating. My AI music song list playlist, the entire playlist. My G7 trading ebook, which I wrote about 25 years ago, which is the trading system I still use today, by and large. And it's all contained there. But also, there's a 20% discount on all of my products and offers, including the private group. So if you want to get my trading courses, natural gas and the swing trading blueprint, for 20% less, or join my private group forever at 20% off, click on the link below, get your Trader Survival Kit. That's the last advert I'll be doing today, folks. So if you didn't get the advert and you aren't here, then you've escaped it. Well done. Because they're not pleasant, are they? Let's be honest. All right, but it's the way we pay our way through this life and through this business. And it's what we have to do. So occasionally I have to tell you that I've got products for sale, and I try to do it as little as possible so that I don't offend you and I don't take advantage of your time that you're spending here selling you stuff that you probably don't want. But if you do want it, the links are below. That's all I'm saying. Good day, GSA. Nice to see you. Good day, Lucas and Jamie Bridges. Good night to you. Good evening. Martin Wolfbauer. Hi, mate. Nice to see you. Always lovely to see you, Martin. And the Jazz, or I'm not been able to stop calling you that, the Jazz. Tejas. And Tejas is #1 spot currently for posts. If you want to get that number next to your name, post more often. Hi, Oliver. How are you, mate? I'm great. I'm doing really well. Thank you. And Makosi, thank you very much. Nice to see you. 2 big, well, I got a strong bicep and a thumbs up from you. Thank you very much. And Neo Rock, good day to you too. Welcome to the live stream, folks. It's a great day today, Thursday. Jobs numbers have just come out. Jobs are pretty good, actually. And that will add fuel to Jerome Powell's claim that we don't need to cut rates. And it will make Donald Trump even angrier when he doesn't. So what's it going to do with the stock markets? Well, as you can see, the stocks are up. And as we saw, a good jobs number is always good for the stock markets, always good for the dollar. And we see the S&P and the NASDAQ moving up. I'm going to go through all my positions in this live session, only to say that we're currently long on the NASDAQ, and thankfully so, but we're short on the S&P, not so thankfully so. One of these will work out. One of them will have to be hedged. I don't know which one just yet, but it looks like right now that it's the S&P, and I think we're moving up on the stocks. It's going to be a big end of this week, I think, folks, on stocks, crypto, across the board. We're going to cover some of that in the stream, and I'm looking forward to your questions. So welcome once again to all of you. Good day, Manish. Nice to see you too. And Daniel Marino, wonderful to see you. MD, fantastic. All the regulars here in the chat, always lovely to see you. And Tanil Patel. Hi, Tanil. So folks, I've just come out of a live stream with Ola Prime, which lasted an hour. If you want to have a look at that, go and look up on YouTube here, Ola Prime TV. Ola Prime TV. I'll put it up in the chat. And I think there's a Prime. I don't know what the link is, but it's you can look it up here on YouTube. And I'm doing a live stream on there every day for the Ola Prime team from 8:30 a.m. Eastern Time. That's half an hour before we have normally done these live streams, and an hour before the market opens. So 1 hour before the market opens and at the time of all the news releases at the appropriate time, 8:30 a.m. Eastern Time, is when we go live at Ola Prime TV. You can catch me there every weekday from now on, and it's live. Today is the first day, and it's a little bit tricky still because we're still sorting out sound problems and team problems because there are about 20 different presenters, coaches, etc. I'm not completely sure of the entire format, but it's running 20 hours a day, 5 days a week. So go across there, check it out. Good day, Sarah. Mansouri, nice to see you. And GSA tried posting a lot, but YouTube says post slow. Yeah, you got to post slowly. GSA, there's a speed limit. It's just when there are a lot of people in the chat. If you post, if there are a lot of people posting simultaneously, some people might get kicked out of the chat or not able to chat, so it just slows things down a bit. It's also very difficult for us to read, or for me and the mods to read the chat when it's just scrolling so fast. So we just slow it down a wee bit. For your benefit, really, so we can get to your questions before it scrolls on beyond them. The Adventure Ride, glad you're live. I follow your natural gas. Yeah, we're going to start with natural gas today. It's a mover. And Roby has joined our private group recently. Lovely to see you, Roby. Welcome to the private group. Welcome to this chat. And I'm looking forward to seeing you and your questions as well. Right, folks, it's time to start. Let's go straight across to the charts. And it's natural gas time. Let's have a look at what's going on. And what a messy chart we've got. So we've got two triangles or wedges. One's big, one's small. We got a very big, large wedge, falling wedge. We broke out of the top of it quite recently, and we broke out of the top of that into what looked like a bull flag pattern. But we've now broken out of the top of that bull flag pattern, and we've moved into yet another new symmetrical pattern. And this is, I'm just going to fix this chart if you don't mind while we're here, and get the correct lines. Text, visibility. I can't be bothered. Don't worry about it. Anyway, we've got a falling wedge here and we've got a rising wedge there. That's a bearish pattern, a bullish pattern rather. It broke out the top. Quite correct. So we started looking for areas to sell into around the 200 period moving average and resistance up into this block here. And we've now got a rising wedge pattern coming out of the falling wedge pattern. This is a bearish reversal pattern, and we're trading right in the middle of it right now. So let's zoom in. This is the 4-hour chart on natural gas, reflecting the Henry Hub futures price over at Black Bull, the broker that I use. I'm going to zoom in on this 4-hour chart, and you can see that we've just actually rolled over into the next 4-hour candle. Now, I only trade this on 4-hour candles, so we're right at the trading moment in time right now, and I'm about to make a decision, so it's quite fortuitous that we're actually live as I'm doing this, and I'm about, that sounded either Scottish or Irish, probably more Scottish, about to make a decision about what to happen here, about what to do here. Now, I've got short positions from there and from there, not too far down. I reduced size on these short positions when we started moving up, so just took some off, and we've got a smaller position now, but we're still short. I have no hedges. There's the 200 period moving average, this purple line just above the 4-hour spike that we saw up, and that spike only went up to the top of the rising wedge pattern and rejected quite sharply. Every time we moved up to the top of the rising wedge, we've rejected sharply, and we've done so on this occasion too. We've also rejected the pierce and breakthrough through the 200 period moving average here on the 4-hour chart, and it's holding down so far. And in this initial move in this 4-hour candle since the rollover just 3 minutes ago, we've moved down a fraction. I want to show you this on a 1-hour chart just to show you the different time frames and how, depending on how you trade these, I trade off 4-hour and day charts, but if you trade off 1 hour, 15-minute and 5-minute charts, more of a day trader perhaps, or even a 3-minute day trade scalper, you'll be looking at the shorter term charts, probably starting with a 1-hour chart. This is the same rising wedge on the 1-hour chart. In fact, it looks even better on the 1-hour chart, as you can see. It's absolutely beautiful. It's almost perfect, starting off there as a support line, and since then it's been a resistance line with a steeper gradient rising trend line coming up from underneath, and that forms the rising wedge pattern. So there we've got the falling wedge breakout, bullish breakout, which it should have done, and it did. And now we've got the rising wedge, and the breakout should be down. It hasn't done so yet. But on this hour chart, you can see we're moving down quite nicely. It's nice to be live with you, by the way, folks, because we can watch this as it's happening. And I don't often get this opportunity. I'm going to zoom in, and let's start getting into a little bit of day trading here. Let's zoom into the 15. And once again, the 15-minute pattern, this rising wedge, is beautifully the price is beautifully surrounded by exactly the same lines that we saw on the 1 hour and the 4 hour. And we're right in the middle of this one right now. And what I'd like to do is to see what happens when we get to the bottom. Notice this is a 1 hour chart, a 15-minute chart. I don't trade these charts. I'm illustrating this to you. Notice that if you are trading on a 15-minute chart, you need to be selling or buying the extremities. You should be selling the top or buying the bottom. You're not too concerned with direction. You're looking for reversals and swings within the broader pattern. So you're not looking to be long or short. You're just looking to take a trade. So we don't want to be trading right now, if you're a day trader, slap bang in the middle of this channel or this rising wedge, literally in the center, diddling in the middle, on 20-period moving average support, bouncing up on the 15, and loads of support beneath us, including the rising wedge bottom. So no trade. If we go down to the 5-minute chart, you can start to see the places that we may target. So we've got some moving averages here which offer support. We're bouncing off those at the moment a little bit, but maybe that won't hold. And then we've got that rising wedge bottom and a double bottom support block, order block, right beneath there at the more or less at the level of that channel. So a breakdown below that level, folks, if you're day trading, I would either be looking and depending on your view on this market, if you're bullish, you would be looking to buy fairly soon towards the bottom of this wedge pattern, these moving averages and the various support, including this double bottom support block zone. You'd be looking to buy if you're a day trader, probably, if you're bullish on natural gas. But if you're bearish, you may want to then consider that we could get one more or several more visits up to the top of this wedge again, and I'll be looking up in this region along the top of the wedge to look to sell into, or on a breakdown below the bottom of the wedge, and most specifically this double bottom zone here at this order block. If we can break down through there and close beneath that level on the 5-minute chart, that could set you up for a good scalp or day trade down to the next level, and that's down to some of these levels down here. I haven't defined them. If you're going to day trade, you need to start putting your levels in. I haven't done that because I'm not a day trader. But going back to the 4-hour chart, you can see, whoops, well, you can't see anything. You can see exactly what I'm talking about when we come back to that rising wedge and just holding beneath that 20-period, 200-period moving average here on the 4-hour chart. And then on the day chart, a slightly different picture, but once again, you can see the very large falling wedge, which did its job perfectly. And now we've got a very small rising wedge, which may or may not do its job. Above us, we've got all sorts of resistance, and 375, excuse me, is the first area of concern. And then $4 and so on and so on. And then as we move up, there are various levels above us. So, are we bullish or bearish on natural gas right now? Well, I'm short. Doesn't mean I'm bearish, though. It means that I think it's the best play that we could sort of pick from right now. It's not convincing. We're diddling in the middle. We do have all the indications that we have a rising wedge. And we're underneath the 200-period moving average on this 4-hour chart. Excuse me. And the last 4-hour candle had a massive spike up, so up to the top of the wedge. So, and that's pretty good. So anyway, we're short, holding that, and the targets will be back down to $3, and I think we could easily get to $3. In fact, I think if we fall down through this wedge, we'll get down to $3 like super quick this week, today, tomorrow, or the next day. Well, tomorrow's Friday, right? Yeah. So today or tomorrow. And we've got the storage report coming out. Folks, if you can put up a storage report number on the page when it comes up, that would be very helpful. Someone could just say, I'll do it, and put it up on the screen in the chat as soon as it comes out, because I do not have view of it right now unless I switch across. How long have we got before that occurs? Let's have a quick look. I'm just going to quickly pull up my economic calendar. Get rid of all the adverts and scroll down. EIA gas stocks change takes place in 21 minutes from now. Consensus is 45 and previous was 53. So expected to drop relatively significantly. So 20 minutes, folks. We'll be online for that, I think, most probably. All right, so that's natural gas, folks. Going back to the 4-hour chart, as we're on right now, we'll see how we go. I don't know what's going to happen next, but I've taken a stance. I've taken a position. I've drawn my line in the sand, and I've gone short. So there we go. Now on WTI oil, and we'll probably talk mostly about energies today, but we'll see if we can cover crypto and some of the stocks. But WTI oil, I posted this up on X this morning saying plain sailing, smooth sailing, something like that. I can't remember the precise words, but something like she's good, all good to go. Just rolling down underneath the 20-period moving average, big bearish engulfing candle. We sold at the top at the 200, and there's not much more to add to that really. We had a short from there, we got out there, and we've started selling again. Looking for this to move down to 50, but initially 55. These lows here at the bottom of the channel, the low point there was 55. The channel bottom, if we got there in the next couple of days, in fact, if we followed my red path, and this is the path that I think we're heading down towards, into, and I need to redraw it. I did redraw it last time we were online. What happened? Something like this, all right? I haven't got the angles quite right yet. I will fix those angles. I always like to have gradient lines on here, and these gradients aren't quite correct. So I draw the zigzags in roughly according to the gradient of the preceding price movement, and if we start moving outside of those gradients, that means we're either overbought or oversold. We were talking about that in the Ola Prime live stream this morning. When it comes to crypto, Ethereum, it's oversold, way above its gradient line. XRP is not oversold, overbought. XRP is overbought, way above its gradient line. Let me show you. It's great that we can do this on the fly, isn't it? So let's have a look. Gradient lines, not a trend line, folks. It's the line connecting the bottom of the move, the bottom of the lowest candle to the top of the wick of the highest candle. It's not a trend line, it's a gradient line. And when you draw these projections for the bull flags and so on, use the same line. So that's a bull move, bull flag, and then the follow-up bull move, equivalent and equal in every way to the approach move. So that takes us up to 3760. But what I'm trying to point out here is look how fast we've moved up from the gradient line. We've exceeded it, gone too fast, and therefore I've taken profit and I've stacked up some orders. I showed this on Ola Prime this morning, and I'm going to show you this to you very quickly. I'm not embarrassed to show you. We've taken, no, we don't want positions, we want orders. There we go. I think that's going to work. So I've got my orders stacked up like that. I'm not advocating that you should trade like this. I've taken a great deal of profit on this trade already, and I'm now not in this trade at all. I've taken all of my profit off at the current price. Now I'm going to add some of it back on dips, and I've just stacked up orders about $50 apart. In fact, exactly $50 apart, except for the last one, which is $100 below. And they're stacked up closer to the gradient line, and those will trigger as and when Ethereum dips down and re-enter me into this move for the next move up to the top of the gradient line at 3760. So that's my plan on Ethereum, no positions. And going back to where we are on what we were talking about, crude oil, and these gradient lines, that's exactly what this line is. This red line is exactly what you just saw in Ethereum. It's a gradient line, not a trend line. It's a guide for the pace and the end point of any move. And so we're lagging a little bit now. I think we could, well, we're not really lagging. I think we could, basically we're going to get to the bottom of the channel. It's going to take a while, and it could take a couple of months. That's what this is saying. And it's just dribbling down. So yeah, I've got a good chunk on this one actually, and looking for a target of 55 and then 50. I think we'll bounce off 55 or 50, head all the way back up to Moab, which is the mother of all breaks, WTI Moab. We've got a Dixie Moab as well. We could even bounce off that channel line and get all the way back up there, like I've drawn in here as a possibility in my red zone, my red line, and we could do that. So a move all the way down and then all the way back up to Moab, which is at about 65, where we are more or less currently, and then a resumption of the move down. It's a messy old instrument, oil, particularly in the last period, last couple of years. We've been trading in this downward sloping channel perfectly, and we've been selling the top side. Only on one occasion did we buy the bottom side, and in fact, that was the only occasion that we had, the only opportunity that we had to buy the bottom in reality, and we did. So we bought the bottom, we sold the top, and now we're selling in the middle, diddling in the middle, much the same as natural gas is. So not the best place, but it is the 200-period moving average, and it is the WTI Moab zone, which I don't think we're going to successfully hold above into the rest of this year. So we've covered natural gas and oil, and we're short on both of them unusually, because normally I'm short on one, long on the other, because they do tend to be inversely or negatively correlated. But on this occasion, we're long on both. So that's energies. I don't know what else you want to talk about, guys. It is beautiful, as you said, Daniel, talking about those charts. I'm going to get to some of the questions, folks, while we're here, so that let's make this a little more interactive. And whilst you're here, so I'm going to try and make this more of an interactive teaching session than just a monologue from me. I think those are useful, but also they're impenetrable. Sometimes you can't get a word in, and so I'm going to pay attention to what you're saying. Tejas is here for the giveaway. I've just given away a $100,000 live trading account, or live $100,000 challenge account at Ola Prime, but it's a past completed challenge account, so no challenge is required to be taken, and I've just given away a fully funded $100,000 account at Ola Prime. So if you'd like to get one of your own, and I think there are a few given away every day, go across to that link that I put up in the chat at Ola Prime TV, where I'm doing the morning show at 8:30 Eastern every morning. Right, let's get some of the questions. So no, not in this place, Tejas, but in the other place. Good day, Oliver. Nice to see you too. Maybe I can get those chats up over here on this side. Yes, that will be easier. I'm fixing up my screen technology here and trying to get a little bit more efficient and fix the ergonomics. Good morning, Sarah, GSA. Igor, nice to see you. The Adventure Kids, glad you're live. I follow you for natural gas. We talked about natural gas. Jamie, Tanil, we've spoken to Daniel. Messi, bullish channel, don't need objective. Talking about Daniel, maybe you're talking about gas or oil, saying it's messy, don't know the objective, has been fun, reduced size, still in the short, good work. Just no need for panic, Daniel or anyone. You know, when you see these sorts of moves on natural gas, and it is messy and it's difficult to trade, don't panic. And if you have to, just get out of the trade or hedge it. Don't hold on to losing trades, especially not on natural gas. And I'm going to have to hedge this if it keeps on moving up and goes out through the channel. And I will gladly just hedge the entire position, which I'm now glad I reduced some size in, because it's not moving in our favor, at least not currently. It is sticking within this channel quite pleasingly, or this rising wedge. And I'm very pleased that the last 4-hour candle rejected so beautifully off the top there. So I don't know what's going to happen next, but just be careful. And I think you're talking about that chart. Daniel, imagine, OMG. James, it's incredible. I can't believe I'm not experienced with the quickness of the market. I'm so excited. This video is going to be awesome to come and watch again. Wonderful, Daniel. I'm so pleased to see you here. Ask away your questions, please. I don't know. Unfortunately, I've been... I used to know what it's like to be a new trader starting out in this game, excited, not jaded, not cynical, not fed up with the world. I'm not like that. I'm only joking. But I know what it's, I kind of remember what it felt like to be a new trader, and the wonder and the excitement of it all, and the learning journey, the exploration, the natural inquisitiveness about markets and what drives the monetary system, and how to make some money out of it all, out of a very exciting, dynamic profession. And I've forgotten some of that excitement, and I've forgotten some of not only that, although I do try and sort of remind myself, I've also forgotten the problems and the issues and the hang-ups that many traders might have, not only psychologically, but also technically in their understanding of the markets and the charts. So it's very good for you to remind me. And if you ask something that seems a bit silly or a bit ridiculous or a bit juvenile or a bit backward, don't believe that, because I promise you there'll be at least, if there are 100 people here, there'll be at least 50 others with the same question, and I might even not know the answer myself. So please ask questions, and that's what this session's all about. I'm going to try and get through all of your questions. So XRP and ETH, the next question is, XRP and ETH, am I still in this? Well, I've covered, basically we talked about Ethereum. So my plan for Ethereum is really simple. I have no position on Ethereum now. For the first time in about 7 months, I think. I started getting long on Ethereum last year, right down here. And I've not really been particularly excited about trading Ethereum most of the time, but we did buy this breakout. And Ethereum has really good technical patterns. This is one of the things that I like about it. See that breakout pattern? That's a beautiful triangle, compression zone, zigzag, zigzag, zigzag into a corner, and the breakout. We traded that market structure break, and that was just before December. I was in Zanzibar, actually, trading this in the middle of the night with mosquito swarms around me and problems with lighting and internet and just African problems in the middle of Zanzibar in a small town on the coast and on the beach. And I was there. You may remember some of the videos I put up and the live streams I did whilst I was in Zanzibar. And you may even remember this move up on Ethereum and Bitcoin. Bitcoin moved up to 69,000. This one moved up to 4,000. And XRP moved from like 50 cents to $2. And this all happened whilst I was in Zanzibar at the end of last year, very close to December. So here we are now again, and that came out of a breakout pattern, nothing else at all. Triangle, breakout. And now we're long on Ethereum again, and once again we've got the same sort of pattern, bull flag, clean out through the bottom. Those clean outs always happen, or at least I'd say 70 to 80% of the time, particularly on crypto. And all that's designed to do, and you have to be aware that it's probably going to happen if you're trading within a parallel horizontal flag, type pattern, congestion, it's going to clear out through the bottom and whip out those weak hands. Imagine all of those hands stacked along that line at the bottom there. Just sort of try and picture it in your mind. The number of petrified weak hand holders with very tight stop losses under support. Hundreds of thousands, hundreds of millions probably of dollars of weak hands sitting on that ledge. And in order to grab the liquidity to fuel the move up, the easiest way is just to take out all of those hands in one fell swoop. And that's what we did. Take them all out, get rid of them, grab their money, and let's go to the moon. Very, very simple, and a particularly evil and malignant, malicious part of the market maker playbook. Now, this is XRP, and exactly the same thing. There's the flat bottom, all of the retail weak hand orders stacked underneath there, paper hands, and it doesn't take long, it doesn't take much, it doesn't take any effort at all to just clean them out with one quick dip down. There's the XRP demolition job, hit job, if you want, and then off we go. Grab the liquidity, steal it from the retail traders, put it into their long positions, and up we go. So be careful of that, folks. Whenever you see flat bottoms and tight congestion consolidation patterns in Bitcoin or any of the altcoins, be aware. And Bitcoin has done a similar thing on many, many occasions. Let me just point this out to you. There's one there, for example, right there, down below that low. Right, just below that low. This was also during the Trump tariff thing. So there's the clean out on Bitcoin. Very, very similar. Bitcoin is a bit easier though, because we have a bear flag, a bull flag rather, and we just dipped down to the bottom of the bull flag. We have managed to get some more longs on there. We've been adding to our long positions from 74, bought some over there, whole bunch in the hundreds, and I'm still holding the majority of it, although I have taken some profit, a little bit of profit, and hedged some at around 112,000. I hedged 30% of my Bitcoin. I think Bitcoin will come back to 112,000 one day, but I think we've got to get to, it's just a matter of where it goes first. Are we going to 112 first? Possibly. I would say it's a 50-50 chance. 112 or 150. 112 or 150. What comes first? I really don't know. If it goes to 112 first, I'll be happier because I'll be buying some more at that orange line. But if it goes to 150, I'll be happy as well. So either outcome is good. Either path up to 150 will do me good. But I wouldn't mind a dip back down to add, or maybe even unhedge. Let's see what happens if we dip back down. For now, though, we're holding up pretty well, although this bobble head at the top here looks top heavy, and it might have to fall down. Whereas on XRP, though, we had a similar bobble head 2 days ago. It's just a silly word. There's the bobble head on XRP, and there it is there. Also bobbly sort of topping pattern, and that could have fallen down, but boom, up we go. And we're full of longs on XRP. Oh, by the way, projections for XRP. I've got 2 lines here, just for those of you interested. I put this up on the Ola stream this morning as well. And all I've done here, folks, is I've taken the bull move into this very large bull flag with a small baby bull flag with inside it, but I'm using the large flagpole, bull flag, and I've duplicated that flagpole from the lowest point of this bull flag over there, and then the end of the bull flag corresponding to the most recent low point of that little dip there. I don't know which one of these takeoff or launch points from the bull flag will be valid, but I've drawn them both in any case. These are not trend lines, these are gradient lines. We're getting a little ahead of ourselves on XRP, as you can see, a little bit too fast, and we need to maybe just pull back a little bit, but there's the targets using the same gradient lines. So I think I've covered Bitcoin, XRP, and Ethereum in some detail. I wasn't planning on doing that, but I am a Bitcoin investor, so I'm very involved in Bitcoin, and I basically have a very large part of my portfolio now in Bitcoin. I'm not talking about my trading portfolio, which is more balanced, but in my investment portfolio, there's a lot of Bitcoin. Mostly, when I say a lot, I mean percentage-wise. I'm not claiming to be a Bitcoin trillionaire. I'm saying a lot in terms of percentage of my portfolio. I'm not a billionaire, I promise. Not yet. Maybe soon, but I don't think so. How about DAX? Any chance of going back to 21K? Let's have a look at DAX. Some good questions coming up here, folks. I like that. Thank you very much. I appreciate the questions. Let's have a look at DAX. Now, DAX is a tricky one. So basically, let's just go over the screenplay of what we've been doing on DAX. I don't have a position on DAX at all at the moment, but we've been selling at the top of this channel. Let me show you this channel. We've got a lot of channels on our charts. We don't normally have so many channels. Right now, we've got channels galore on all sorts of instruments. Here's the DAX channel, a very long channel going back 2 or 3 years. And we've basically, I just want to actually make this channel a little bit neater. Need to get rid of, let's get rid of that one and get rid of that one. No, not that one. Yes, that one. And get rid of that one and leave the center line in. Where's the center line? There we go. Okay, beautiful. All right, so we've been trading within this channel for a long time. Every time we've got to the top, we've been selling, and we sold on that occasion. We got all of that moved down with the, that was the tariff dip. That was just lucky. We happened to be short, and it completely collapsed. Luck, pure luck. And then we got short again at the top here on the revisit to the channel. That dropped down to the 50-period moving average where we got out. That wasn't luck, that was skill. And then we bought again at the same price, bought exactly at the moment we got out, and we then got out of that trade at the 20-period moving average. Again, not luck, but skill. And actually, funnily, the best trade that we've had on this entire chart recently was the one that was just pure luck. So sometimes luck is your friend. So here we are right now, really diddling in the middle. We've got a channel center line, a swing low down here where the orange arrow ends up. We've got the channel top above us at around about 24.5, 25. And then we've also got the possibility of the top 200-period Bollinger Band and the 786 Fibonacci extension at 26,000 or just below 26,000. The question in chat was, can we get back to 21? Well, I don't know. I'm just going to check that is the correct question and that I'm reading it rightly. I think so. It's very difficult. There's a lot of chat. But let's have a look at the 21 and a bit level. And that's a very long way down. It's the bottom of this channel right down here. And I think we could get back down there eventually, but there's no evidence of it just yet. I don't know. To be honest, we're either going back down to the bottom of the channel or we're going up through the top of the channel onto new all-time highs yet again. I favor the last scenario, the rally. I think it'd be very difficult to get back down there again at 21 and some change. And that's around about where the 200-period moving average is. So you may consider hedging at this point if you need to. But if this does go up much faster and quicker and you're still short, you might run into some problems. So be careful of that one. I don't think it's bearish, but I'm not convinced about the bullish side. And remember, I'm short on the S&P and I'm also long on the NASDAQ. So I'm not totally convinced on the indices that we're going up, although I'm long on the NASDAQ, short on the S&P, and I'm long across some of these names. Now we've got a long on MSTR. That's going great. Beautiful trade. I've taken most of the profit on, only got 10% left on this, and I think we could get up even higher. but we don't have enough on this. We need to get some more additions onto that one. So I'm holding that 10% for the dream for a move much higher, and also long on Tesla. This one's been doing good for us. And after that island reversal, abandoned baby at the 100-period moving average, and the bounce up, the gaps, and all that, big reversal pattern here. And we're now trying to get through this conglomeration of the 200, 20, and 50-period moving averages, which is going to be really tough. But I think we're doing a good job. And actually, as we're talking, we're moving up. A little bit down. No, we're not moving up. We a small bounce off the green line. But we are trying to move up and holding it pretty well. If we can hold above all that messy bunch of moving averages today, then I think Tesla could easily get up to the next swing high at about 350 and then much higher. I'm a Tesla bull in the same way that I'm bullish on quite a lot of these magnificent 7 names, despite everything, despite their ridiculously unsustainable, untenable, undoable rally. They're just carrying on, including Nvidia. And this is the only one that I'm long on ARK, I'm long on Tesla, I'm long on MSTR. I want to get long on QBTS, although we haven't had that chance yet. I'm long on the NASDAQ. So you can see the theme here. Long, if I drag my mouse around from the top left-hand side of the chart and drag it around along the bottom like that, all of that is long, but then I've got some shorts, SPX, and potentially the German 30. So you can see where my longs are, all in Nvidia, ARK, Tesla, MSTR, techs, crypto, that sort of thing. My longs are also on copper, silver over here, all in the same ballpark or ballroom, as one of my Afrikaans friends likes to call it, in the same ballroom. So yeah, mixed bag a little bit, I suppose, but I'm going with the long side for now until proven otherwise, and we're remaining short in the S&P until proven otherwise. One of those won't work out. One of them will. I don't know which one just yet. We'll hedge the one that's wrong. All right. NatGas about to pump, says Jamie Bridges. Let's have a look. Are you saying it's on the move? I don't see that, Jamie. No pumping going on my chart. All right, let's move on. How about DAX? We just talked about DAX. Thanks. There was Syed. Any chance of going back to 21K? If you're counting on that, Syed, I would get out of that trade, hedge it, or take a stop loss or whatever. If you're hoping on that, I don't think that's a good bet at all. Cornelius, Parashai, gold and silver. Okay, let's have a look. I think we talked about gold and silver. Maybe we didn't actually. Let's have a look. We didn't talk about gold and silver. Thank you very much for bringing that up. So gold I'm short on and silver I'm long, much in the same way that I'm long on the NASDAQ and short on the S&P. And in fact, it's pretty similar play in many ways, in fact. So short on the techie stuff and long on the techie stuff, the NASDAQ, and short on the S&P, the more sort of broader picture, more in sort of mixed industries, different sectors. And then gold and silver, similar sort of thing. Long on silver, the techie, exciting, fast-moving stuff. And then short on gold, which is the broader, more boring, more stable stuff. So not a dissimilar picture in a way. And we're short on gold, and gold has been moving literally nowhere, apart from a little peek out through the top up to that trend line. It's not a trend line, it's some other line. Maybe it is a trend line. But since the rally. So we're going back. This rally began or ended really on the 16th of April, and we're now 17th of June. So it's July. So 3 months later, and we're still where we were when we got there. So not very exciting. And you might call this, there's a new word that I learned, which I appreciate. I like learning new words, pull back in time. And sometimes a pullback in time means that we don't have to dip down, and all we've got to do is move sideways. And the pullback in time does a couple of things. It allows the moving averages to catch up, and so we don't have to dip down to them. They come up to us. And also, it gives the market time to think about things. So all the market participants, including you and me, have had 3 months to think about what might happen next, and that's not good. It's not good to have too much time to think. And we've had a lot of time to think. We've broken out of a sort of downward sloping trend line, but you can delete the trend lines because they mean absolutely nothing in a sideways market. And I'm going to delete all of my various positions because they all ended up with about less than $100 of profit in terms of the gold price. So I'm just going to, so a little bit of profit, $100 in terms of the gold price overall from little bits and pieces here. And now we're short. And my red arrow is here. I'm going to move it across to this next green arrow so that you can see it, because it's not visible because of the dark charts that I've got to use for Ola Prime. But there's our short. We're right at our short entry price as we speak. After 3 months of sideways consolidation, pull back in time. Normally, most traders will tell you, if we can't get going after a certain period, if the long is wrong, then the short, I don't know what the rhyme is, someone will know. If the long's wrong, the short should be caught, or the short is naught, or something like that. But basically it means if the pullback in time doesn't result in any go up thereafter, it's very, very likely that we'll just suddenly collapse. Remember those clean outs on Bitcoin, XRP, and Ethereum that I talked about, cleaning out through the bottom? Well, we've now got a flat bottom situation on gold too. In fact, a double bottom precisely at that green line there, and a couple of bits of support there. And so I would expect and imagine and anticipate almost a flash crash through that green line down to at least 31.20, and that's this next swing low support. I think that's pretty likely to occur, and so I'm positioned for that, but I'm not sure. So in order to mitigate that risk, I've had to take a long position on silver and let that ride out while we play with this gold position. So there's 31.20. Let's put it right at the bottom instead of the candle. Let's put it at 31.20. I like the 20 numbers too, 20s and 80s. And I think what we could do, and I'm short, remember, I'm going to delete this little bull flag. That's meaningless as well. I've deleted all the arrows and lines, and I think what we could get is just a little, what we just saw on the cryptos. Crypto and metal, Bitcoin and gold, some considered to be similar. Actually, I'm going to use a different tool. Let's switch to the drawing tool. Where are you? And because they're similar, they may do similar things like that. All right? So don't be surprised if that happens on gold. And in fact, I expect this to happen. And I half expect this to go even further down into these regions here. 200 period moving average, and the big 3,000 number is just about here. And there's a swing low at that 3,000 level and a swing high. So yeah, I think that's what could happen. Either we'll bounce off 31.20 or we won't, and we'll go down to 3,000. Or we won't even get to 31.20 and we'll move up from here. But I think that's the most likely case, a dip down to 31.20 perhaps, maybe a bit more range trading for a while, a clean out, and off we go. And if that's the case, we're positioned for that dip down to 31.20, and we'll probably hedge or take profit, see what happens. If it carries on moving down, we'll ride it down further, down to 3,000, exit the shorts, add some longs, and hope for a big smashing bounce all the way back up to 4,000, beyond where we are now. So that's gold. But at the same time, I'm shorting gold. I have to be long in silver because gold is in an uptrend. It's bullish. We're counter trend trading gold, which is more risky. So we have to offset that with something else. And this is a hedge. They call me hedgehog for good reason, I suppose. So I've got a short on gold, which I'm not entirely comfortable with, but I want to be short on gold because of the situation. And so I need to mitigate that risk. So what else can I do? I can't buy gold at the same time. I could have a fully hedged position on gold, but then I'm not using the short direction in my favor. So what I can do in lieu of that is take a long position on silver because they're very highly correlated. And in fact, the gold-silver ratio is dropping and falling down, which means gold is performing worse than silver currently, and silver is doing a lot better. We've taken 5 trades on long silver positions simultaneously with 5 short gold positions. So on 5 different occasions, we've been short on gold, long in silver, and on each of those 5 occasions, we've profited from the short gold and the long silver. I'm hoping to do that again today. As you can see, silver is bullish today. It's moved up, only by a penny or 2. Now it is. A second ago, it was a penny down. Now it's a penny up. And if we look at gold, it's more than a couple of pennies down. In fact, it's significantly down. We've moved from, let's get this out from underneath my face. So as you saw, silver's moved up a little bit today, whereas gold has moved down. In fact, gold's moved down quite a lot from 3348, and we're currently at 3333, and we got as low as 3310. So gold looking weak, and silver finding a bit of a bid here at this current level at the just above where we got long. So we're a little bit of profit on silver, a little bit of profit on gold, but in completely opposite directions. And that's the way we're playing it. And it might sound weird to you. I don't suggest you do the same. I'm not encouraging you to do anything that I'm doing. I'm telling you exactly what I'm doing. That's all. Got nothing to hide, nothing to prove. And also, I don't really mind whether you do what I'm doing or you don't do what I'm doing. I want you to trade your book and trade the way you like trading. And I want you to learn how to trade for yourself. I don't want you to be in my chats, in my live streams for the rest of your life. I want you to learn how to do this yourself and do it very, very well. And the more of these streams and things that you attend, the more you'll learn. Now let's go across to currencies, but don't be addicted to them and don't rely on them. Start setting up your own strategies, set your own book, ask your own questions of yourself, ask your own questions of me, ask your questions of everyone else. Come and join us in the private group and become a member there. And you can ask questions of the other hundreds of other members there. There's some pretty good traders inside my private group now, and a lot have joined recently. Going across to currencies, you know, I really don't like the way currency have been trading recently, but they've been a little bit better than usual, I suppose. And we've only got a couple of positions on here, and we're long on the pound. It's been a little disappointing, but actually it hasn't really done anything for 3 days. We dipped down to this over-under support level and the Fibonacci retracement, and it's a previous swing high on a couple of occasions there, 3 occasions, and it was a swing low on a couple of occasions, and we've come back to the same level in a bullish uptrend. No one can say this is a bearish trend. We're moving higher on the pound. This is the day chart. So we are in an uptrend. We should be looking to buy, and we've moved down to the support level. Here on the 4-hour chart, you can see the support level and how we've tried to turn around here. Look at that big candle. That candle happened when Jerome Powell looked like he was going to be fired yesterday. That's how much the market moves on such nonsense. Maybe he's going to be fired. I don't know. I don't think anyone really cares that much. But it's an excuse to produce some volatility in a market that's been really, really boring. As I showed you, we've moved almost nowhere on many sectors for many, many days now. And so it's an excuse to get some volatility. So that's the pound. I think that's a reversal bottom on the 4-hour. And as I keep on saying, I think the dollar's got weakness to go. And the dollar index, I don't have it on here right now today, but the dollar index currently at about 96, 97. I think that's going down to 93 and maybe even 90 and below, and that'll push all of the majors up against the dollar. That's my general technical and fundamental view, but the more I see about what's going on in Europe and in the UK, from where I originate, my home country, my country of birth, the United Kingdom, Great Britain, doesn't seem to be so great anymore, and nor does Europe. And there are enormous problems with riots currently as we're speaking, right this second as we're talking, still going on in Spain, and all over the place, and we've seen them in France, all over Europe, and Europe's a complete mess, absolute chaos. And even though I'm a Brexited European, I suppose, I put England in the same basket. I don't like any of them, and I don't like what's going on in Europe and the UK, and I don't like the pressure, all of that nonsense. And I'm not going to talk politics right now, never going to talk about politics here, so don't ask me. But what's happening in Europe and the UK, I'm not happy with. And I think the economy will illustrate that, and that includes the euro and the pound. So that's a concern in the back of my mind, even though I'm bearish on the US dollar and bullish. I'm not really bullish on the euro and the pound. I'm bullish on the euro and the pound against the US dollar, but really not against anything else. Right. What else do we need to look at? Softs and grains. Oh, I haven't talked about silver. Yeah, silver. Let me give you some projections for here. Silver, yeah, I just like it very much. So we got long right down here at $31. We took profit. We got long again, actually, at $36. We took profit currently where we are trading at the moment, a couple of days ago, just above where we are, actually. And I'm back in now, but not with the full position. And I'm looking for this to move up to the all-time high at about $55, $56. And I think we could surpass that. But that's, I'm looking a year or two or maybe even 3 or longer out. So don't worry about that too much. But very bullish on silver. I'm very bullish on copper too. And I think both of these metals, and uranium actually, the other metal that I'm bullish on. I'm not very bullish on gold. but I'm very bullish on the commodity metals, and that's copper, uranium, and silver. Silver having an added advantage in that it's not just a commodity metal, but it's also an investment metal. Copper is definitely not an investment metal. It's very cheap, but it's a very important metal. And because it's cheap, I think, not just because it's cheap, it's been cheap forever, but there's opportunity for copper to move up. And I think copper could get a really good move, and I think we'll hold this level. Descending triangle here, which means we may have to poke back into the channel, but that's okay. We've got space to add, and any dips in copper, silver, and probably gold, but gold might have to have a deeper dip down to closer to 3,000. Would be good opportunities to buy some of these metals. And uranium is one of those. Let's go back to the energies page. Even though natural gas moving down, by the way, natural gas alert, alert. All right, here we go, folks. This is what we're waiting for, exactly what we want. When is the storage report coming out? Let's go across and have a look at that quickly. Has it come out? Has it? Yes, 46. Storage report, 46. Pretty much in line with expectations. So no great shock there. But look at the price of natural gas plunging as we speak. Let's go across back to the chart. Yeah, so this is what we want, folks. So the storage report has forced this down. So that's good. And we're approaching the bottom of this rising wedge. We've got to get through that support level. See my white horizontal line there? That's the line in the sand right there. 355. A close beneath there will see us on our way. Close above there today, this 4-hour candle, which has 3 hours 15 to go still. So it's a brand new baby candle. But when this candle closes, if it closes beneath 355, it's bearish. If it closes above 355, it may be bullish. But that's a very good sign. Storage report forcing us hard into the bottom of that rising wedge with a lot of gusto and momentum. You can see it on the spot price here as well at Pepperstone. What's oil doing? Bit of a bump up in oil. So they often trade in opposite directions. Natural gas down, oil up. URA. Yeah, so the question I put up on X this morning was URA, we're trying again. Are we going to get through here on this occasion? I think we will. We've now got a big, massive, huge double top to get through on UEC. We've been trading both of these uranium instruments, UEC, URA. We're not in URA at the moment, waiting for a pullback. UEC has done some catch-up. URA has stalled. URA has stalled, has become stagnant. UEC has taken up the reins. There's URA at the top, become boring. Waiting for the pullback. For about 2 weeks, we've done nothing, looking for a dip down into some of these order blocks to get long again. No position on there, but we kept our UEC long position, and that's moving up very rapidly up into that order block and the potential triple top over here. I don't think it's going to be a triple top. I think we're going up through the top, and if we do and break up through $9 precisely and close above $9, I'll add some more longs onto that UEC long trade. And then I'll be looking to buy a URA on dips at some point if we ever get that chance. But I'm glad we got the UEC position. All right, Saeed, nice to see you. Dax, we talked about that. Barbara, nice to see you, Barbara. What do I think about AMD? I'm not trading AMD, Barbara. Perhaps if you remind me in the next live stream, I'll cover AMD, but I'm short on Nvidia. I don't know how AMD is trading today. Haven't had a look at it, but if it's doing what Nvidia is doing, I'd probably be short, but looks like Nvidia is actually moving up. We'll see how AMD does. I don't know. Haven't had a look at that for a couple of days, actually, a few days, about a week. Gold is testing the trend line. I'm getting scared. Don't be scared, Gamer 24, 2004. If you get scared when you're in a trade, gold is testing the trend line. If a trade scares you, Gamer 24, you are doing it wrong, that's for sure. Your size is too big, your trade's wrong, you're incompetent, or there's a better word I'm looking for. Incompetent might be one of them, but the other word is anxious, uncertain, in something, unconvinced, unsure of yourself. So you're either incompetent, unconvinced, or oversized. Which one of the three is it? All right, now moving on. Oh, and by the way, when it comes to Bitcoin, I just wanted to quickly, I'm just looking at this chart. It's in front of the screen, right in front of me right now. By the way, this is a megaphone pattern as well, which is a scary reversal pattern here on Bitcoin. I'm giving an exception for Bitcoin, and I don't think this is going to reverse. I'm looking at this on the day chart, but if I go to the 1 hour chart, I can see there's some action right now happening today, bouncing out of that order block, particularly the very bright green one and the 200 right down there. So this is looking good for Bitcoin, and I think we've potentially found an intraday base there now. So yeah, so if you're scared gamer 2004 about any particular trade, you're doing it wrong, and you need to do it differently, I suppose. Come and join the private group. That's a better way to start, maybe. And please don't take offense if I call you incompetent. It doesn't mean that I'm disrespecting you. I'm incompetent in all sorts of things, many, many things. Almost everything I'm incompetent in. So if I call you incompetent, and I'm not saying you are, I'm just saying you might be, it's not an insult. I'm incompetent when it comes to making clothing or doing oil painting. No, I wouldn't find that offensive if you told me I was incompetent. All right, any thoughts on Nvidia short? Yeah, Duvrin, we're short on Nvidia. We talked about this earlier, and holding that short. Now, this might not be a short. It might not turn out to be a short, and I might have to hedge this. But remember, I'm long on all sorts of other things at the same time, and I have a fairly balanced book. So even though I might be long on MSTR, Tesla, Bitcoin, Ethereum, all sorts of those sorts of names, Google, whatever it might be, all the names that I'm long on, but I happen to be short on Nvidia, doesn't mean that I'm bearish on the market. It just means I'm bearish potentially on Nvidia. We've got what looks like a potential island top reversal here. We haven't broken much above it, and we haven't broken below it. If you put a cluster around there, it's a classic chart pattern. It happens only about once or twice a year. On all of the instruments that I trade, you rarely see it, but when you do, it's an incredibly powerful reversal pattern, and it's called an island reversal, or it's called an abandoned baby. Normally, when it's just one candle, you would call it an abandoned baby, and when it's a cluster, you would call it an island. And what one is looking for is for this sort of thing to happen. All right, we want a gap down, and then we want this to move down. That's the sort of thing I'm expecting. I don't know if it's going to happen. And once again, the only reason I feel licensed to short Nvidia against a very powerful uptrend is because I'm basically long on the rest of the market except for the S&P. So I've got two indulgences, if you will, and that's a short SPX and a short NVDA, and those are my indulgences, and they're also tactically a hedge against my positions, which are very weighted to the long side, very biased to the long side, and I've got these as a sort of a drogue, if you know what a drogue is. When you're out on the ocean in a yacht and you've lost your sails, perhaps, and you're drifting in the wind and you want to keep a direction, you have to put this thing that you tow behind your boat, which creates water drag and friction, which keeps the boat straight. And so it's similar to that in a sort of a way. So yeah, a drogue. Anyway, folks, that's it. And I think we've covered most of what we wanted to talk about today. These streams never seem to have enough time in them. And before you know it, an hour is gone, and an hour has gone. And it feels like we've only just started, but it's gone so fast. So natural gas forecasts came in pretty much in line with what we wanted or expected. And as we've seen, the price has come down. So all looks good for the short side there, folks, but be careful. We may have to suffer a little bit on the WTI longs, on the shorts, because if natural gas crashes dramatically through this rising wedge bottom and falls down sharply, like I suggest it probably will, and I think we're going to $3, and that's much lower down here. We're at 355 now. Then we should see a little spike in the price of WTI oil at the same time. So it swings and roundabouts, and there's no free lunch, as I always say. Amit, yes, we can go through the softs, no problem at all. Let's have a wee look. Right, sugar. Softs and grains, here we go, folks. Sugar, looking great. Back into the channel. Not much of a channel, really. It's just really not a... It's a very skinny channel, and I think we could actually... I don't know. I'm not going to redraw it now. I'll redraw it for the next session, but, you know, it's got to be a broader, shallower channel, but it's looking good. And we're above our last entry. So we've got a little bit of profit starting off on sugar right now. So that's good. And yeah, my target for sugar is just really up into probably just up. Oh, that's cocoa. Sorry, we'll come back to that. The target for sugar. Well, I've got them drawn on here. I want you just to put those on your line. These are Fibonacci extensions. So these are just rough guides, but you can just have a look at all this previous swing highs, and those are roughly my targets. I've got a different chart on here. I've got the lines drawn on. But anywhere up into these swing highs and fib resistance levels, a long way above us, actually. There's good potential for this one. They are saying for the millionth time now that the commodities super cycle has officially begun. Well, they've told me that. I think over the last 5 years, every single year at around about this time of the year, the commodities super cycle officially begins, and the commodity markets move down as a result. And that's what's happening. Well, that's what's happened. Maybe now is the time for this to change around. Whereas on cocoa and coffee, we're still short. Now, short in mind, I'm short in actuality on cocoa. I have a position, in other words. We're short from that level there at about 10,300. We're currently trading at 7,600. I'm looking for this path. And I think we're probably due for a bit of a bounce, but we could get down to the swing low. Let's wait to get down to there at about, I don't know, 7,000. Yeah, I think 7,000 for a bounce. We're trading at 7.6 right now. So 7,000 for a bounce back up to the channel center line. The skinny white channel I'm talking about, this channel, the downward sloping one, back up to the channel center line. And maybe this will look more like this. Where's that level? More like this. Is that 7,000? Yeah. And then back up to the channel center line and then down again. So that's my plan on cocoa, and we have a position on there. I'd like to add some more to that if we get the chance on that rally, back up again. And then coffee, we don't have a position on, but I want to get short. Now, coffee is going up into the selling zone beautifully, and we've got two selling zones, center of this little skinny channel, and that's at 313, and then the top of this skinny channel, and that's at 330. So, and we've just dipped down a wee bit down today. So we don't have a position on this. I want to get short. I'm looking for a move up to the channel center line or the channel top. It's tempting to get short right now because we didn't quite get there and we're turning around. We'll see how today closes. Maybe we'll have a little go at that today. I don't know. We sold orange juice 2 days ago. This 3 candle gap up, 3 marching soldiers, bullish pattern, but only into resistance. And that was caused by, I think, tariffs on orange juice. And seeing as most of it comes, I think, from sort of further south, that's just a tariff increase. But we've been looking to get short on this. So I think this has driven us up into the zone that we wanted to sell into in any event. And we're there now. So we're short. Back into the top of the range. Target, bottom of the range. So we're short at 330 on orange juice. And the target is 200 or 210, which is where we got last time. And then we also have positions on corn and on cotton. These are looking quite good. Big clean out, double bottom, sideways movement, PIT, pain in the ass, or pull back in time. Same thing really, I suppose. And we want this to move up. I'm happy about that one, looking good. We're in some profit, quite good profit on that already actually, and some good potential profit to come. And then corn, below our entry point, actually above the last entry point, but below that one. And also just dribbling down. I haven't really paid a lot of focus to this one just yet, but I suppose we could put a trend line on here. We've got to start looking at channels, and I'll get to this analysis a bit later on. Nothing's really happening in any case, so it's not a lot to be panicking about, or even thinking about. But we've got a very small channel, lots of channels on the charts today, bouncing off the bottom, and I think if we can get through the top of the channel there, we'll be okay for a decent move up. This is the day chart on corn, and I'm looking for a move back up into, I don't know, sort of the middle of this range. I'm really thinking about 6, about 5, maybe 550 to 6, somewhere around here. But I think sort of in this region, but at least probably up to about 520. We're currently trading at 411, so maybe there's not a lot in that one. Maybe only 20% move at the most on that one, I don't know. But you never know. Maybe we are entering the commodity super cycle and that we've all been very patiently waiting for something that will eventually actually arrive. I don't know, and I don't really think that's going to be the case. I actually think that, and it's all got to do with inflation and demand, and I don't think that's going to be the case, but I could be wrong. And then wheat also dripping down, but once again, this is just literally moving sideways since we have been in this range for an incredibly long time now. And we were trying to buy wheat at the beginning of the Ukraine war, going back that far. So you can imagine that's, I suppose, October 2023 was when we started buying wheat. We've taken profit occasionally, but and maybe only once or twice, maybe twice. But since then, and that's going back quite a number of months, we've just dribbled down into this corner and got stuck. And we've got this rising little tiny, pathetic little rising sort of trend line underneath us. But the dominant pattern is this downward sloping trend line, which is forming the top of this pattern. I could draw another trend line in here, actually, and I probably should do, but it's basically a flat bottom. And maybe it's better just to have a flat bottom drawn in here and get rid of this one. Let's do that. And let's have a wee look at that, because I think this is kind of interesting. And it's along the lines of what we were talking about when it comes to crypto, this sort of flat bottom clean out that sometimes has to happen. And maybe we've got to have that here, or maybe we already had it. I don't know. In any case, we're long on wheat, and I'm still happy with that. We're holding the Fibonacci's. We're holding the bottom of this pattern. And in fact, there's a shallower trend line that comes inside that we've already exceeded, and I think we've broken out, and I think wheat's going to move up. It's just a matter of being incredibly patient and waiting for this to play out. That's a quick rundown of softs and grains. For your pleasure, Tanil. When the long is wrong, the short feels strong. I think you're right, MD. Let's have a few more of those. When the long is wrong, the short feels strong. Right. Yeah, so we were talking about the pullback in time when the long is wrong. Whatever. I like the way you've done it. All right, folks, there's so many questions coming in. I don't think I'm going to be able to get to them all. The time is up. I've got to get back to my charts and my private group. It's been wonderful being here with you. And please like and subscribe. Make sure to join me tomorrow morning, 8:30 a.m. Eastern Time in Ola Prime TV. I'll be on with Paul doing the morning show, and I'll see you there. Take care. Have a great day. Thanks for watching. Make sure you like and subscribe on the way out. And if you want to join my private group, there's a link below. But even if you do none of that, make sure you get the Traders Survival Kit. There's a link below. A whole bunch of free stuff, 100% free, including discounts for all sorts of juicy bits. Take care, guys. It's been wonderful to see you. I'll see you in the next live stream. I was going to say a good trading day, but that's relative for everyone. And some of you won't be having good trading days, and it might be considered to be insensitive. If you're having a bad trading day, I hope it gets better for you. And just try and manage your risk. Be very, very careful. Try to manage your risk. If you don't know how to do it, ask me. I'm around. Take care.